Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets and the SPY for April 2nd, not April, it's May now, May 2nd, 2025. And with that said, let's jump straight to the data. There we go. Alright, so I'm going to go over what happened today, Thursday 1st. So we had the jobless claims, and this is something I've said that I have not been watching like really closely, but it's something I am looking for. So we had a major uptick in the jobless claims today. Excuse me. That's a little concerning, especially when the forecast was expecting basically 30,000 jobs to you know or continue increasing the continued jobless claims anyway by 30,000. Instead, we got 80,000. A big difference, so it is a concern. Nothing major right now though, but it is a concern. The ISM data, nothing super special here. Um, yeah, nothing super special about the data today. Let's go into the data tomorrow. Well, we did have the Atlanta GDP come in really low, and that might be because of just some of the GDP prints we've been seeing, where they've been negative or just down quite heavily. Now, let's go into the data sets for tomorrow. Tomorrow's a really important day for data. It's the non-farm payrolls, the NFP data, and the unemployment rates. Super important. That's going to be during the pre-market. Hopefully you're prepared. Hopefully you have positions hedged. I don't like to swing overnight right now where I'm not hedged for, you know, both outcomes. So essentially that's the major data of the day tomorrow. We do have factory orders, but that's really not gonna do much. It's all of it's all of this data right here. The unemployment rate, the NFPs, the participation rate, um, plus the earnings we had last night, or tonight anyway, which was Apple and Amazon. Now, Apple and Amazon aren't doing very well right now. And let me go ahead and swap the screen over and I will just quickly look at those. They're doing pretty bad in the overnight. Let's go to the 5-minute chart. As you can see, big, big scoop down. Same thing with Amazon. Now, this could lead into some major selling come tomorrow, but as you can see, the SPY overnight is up quite a bit, so we'll discuss it. But I just wanted to show you that those two earnings did not do very well, and they're down quite a bit. It is concerning seeing Apple down because, again, Apple is one of the largest tech companies in the world, so just keep that in mind. But yeah, let's go into the next part. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And getting into the technical analysis, as always, let's turn on our moving averages and Bollinger Bands because we are finally nearing the upper Bollinger. And this is something we've been talking about for quite a while now. Something some people told me I was full of it, but here we are, up at the upper Bollinger. So let's go over our levels. So we closed at 558.47, which currently the 5 mile is at 553.76. So it's very likely we're going to see the 5 mile open around the 555 to the 556 range, give or take. It does kind of depend on the pre-market how far up we're pulling. So the farther up we pull in the pre-market, the higher up the 5 mile is going to open. So currently right now the overnight is at 563, so a full $5 up from where the close was. So we could definitely see the 5 mile being pulled up a lot closer to that 556 range. It's very important you write it down on the open tomorrow. It could be a very key level. And I'll just go over why really quick before we discuss the other moving averages. So I always talk about the upper and lower bounds of a moving average test, a slash 5 mile test. The upper bounds of the 5 mile is going to be extremely high tomorrow. It's going to be around 558, even 559 potentially. So just keep that in mind if we start heading down to potentially test support. If we have some bad news or something, we could have a full 5 mile test, which means we can go all the way down to the lower bounds of the 5 mile. Excuse me, which is around 553. Could be lower, could be higher, but essentially that's what creates a large elevator downward, is testing that support. Now, we're kind of between the upper Bollinger slash 200 mile and the 5 mile right now, so the market really has to choose a direction. But let's quickly go over the other moving averages. So the 10 mile is pretty far underneath us right now. It's at 541.85. The 20 mile is at 533.54, and as I mentioned earlier this week slash last week, the 10 mile is starting to heavily pull up. It got to that 540 level that we discussed, and it's really starting to pull support up very quickly, along with the 5 mile. And then we have the 20 mile at 533.54. So again, those are starting to pull away from each other. This is extremely bullish, even though we're in bear territory still. Now we have the 200 mile at 570.10 and the upper Bollinger at 569.64. So essentially they're sitting right on top of each other. If we test one of those levels, we're going to be, doing both. And before we go into what kind of happens in an upper Bollinger move, I want to show you the ADL because we did have a dip. We're even though we're definitely out of that like channel that I talked about, a few times last week or the week before. We've been in that heavy chop channel during the correction, and now we're out of it. But we did have a little dip today. I'm not very concerned about it. It's very likely going to pull up tomorrow. Now, let's talk about upper Bollinger move because we haven't had one in months and months. Let's see how long actually. It's been quite a while. We haven't had an upper Bollinger move since February 19th. February 17th, actually. Looks like February 18th. Yeah, so it's been 3 months. It'll be nice to get back up there again. Now, let's quickly go over the mechanics of an upper Bollinger move. So, upper Bollinger moves kind of work in a 4-day cycle. We have the first day, which will either close at the upper Bollinger or above the upper Bollinger. So let's say we're just going to say the upper Bollinger's at 570 just because it's close enough and it's easier number to work with instead of having to go into the cents and everything. So this 570 level. Okay. If we push the upper Bollinger tomorrow, we should very likely push above that level and close above that level. That's how you know the upper Bollinger move has started. That will be session one. You're looking for a higher high than essentially we had today, Thursday. So above that that 563, 564 range. Um, we need it to close above the 570. Now on day two of the upper Bollinger is when you expect a higher high. So come Monday, very likely we'd see probably potentially the 572 all the way up to the 575. Um, and what that does, let me go ahead and draw for a second. What that does is it creates a top of the cup, which we have right here. Sorry, it's going to be a wonky looking cup. But we have the cup right there. Okay, let's hide the Bollingers for a second. Very likely this is gonna fill out, and the top of this cup is let me see, I have it written down, 570.79. Okay, so very likely we're gonna reach the top of that cup, claim the upper Bollinger, start testing the 200 mile, and then activating the upper Bollinger day one. Day two comes around, we get the higher high. on that day two is when you start shorting. And you want your shorts to at least be about 1 week to 2 weeks out. I generally focus on about 2 to 4 weeks out, but um, generally that's what you're looking for. Okay, you're looking for about 2 to 4 weeks out, and you don't want to short on day one because the support from the 5 month can actually be built to that level by the end of the fourth day of this upper Bollinger move. So day two is when we short. Day two is when you generally get the higher high, and then it starts pulling downward. And where does it pull downward into? It pulls downward into the 5 month. Okay, so the 5 month is going to be climbing upward. The market's going to be climbing upward, and then we need to retest support. So once we do a upper Bollinger move, day two, we should start consolidating downward towards the uh, 5 month. Now, the 5 month very likely is going to be way above the 560 by that point. It could potentially even be in the 565 range. So um, that's what I'm saying. Shorting prior to the higher high of the day two isn't wise. It really trims your premium you can get on this move, because this can be a very big move. And the reason why is because since this is the top of a cup, let's go ahead and hide the moving averages for a moment. We have to build a bearish structure. Okay. And why do we build bearish structure? It's the top of a cup. We need to build a handle. Okay, and this is just an arbitrary level. Don't pay attention to where I'm putting the bottom of this handle right now. It could go way further, it can go way higher. Okay. We'll discuss that kind of in a few days. But from this top of the cup, we should be looking for micro bearish structure as well. And that's kind of where you get that higher high. Sorry, that should be a shoulder. They're just turning into lines. Okay. Well, there is supposed to be a micro head and shoulders right here. That's kind of what you should be looking for over the next few days is writing calls upward, securing the upper Bollinger. Um, if we don't secure the upper Bollinger, and this does happen sometimes, where we will push right to that level and reject. So um, get a few short dated puts as a hedge just in case. And if we do reject that level, we will be pulling all the way back to the 5 month. I don't think that's going to be the case just due to how far away the 5 month is from the upper Bollinger right now. It's very likely we're going to see the upper Bollinger move and then consolidate downward into that. Um, this is kind of what both the bulls and bears would want. Uh, the bears want this liquidity because this is really, really good liquidity. We have gaps all the way to the 576 right here. As you can see, the 576.41, that could very easily be a full cup as well, depending on how hard they want to sell off right here. But that's kind of what I'm looking for. The only difference between kind of what the bulls and the bears want, again, is the bulls want this to turn into a handle, where the bears want this to become an inverse cup. Okay, so bears are looking for a continuation from support retests, where bulls are looking for a bounce. Um, Also, I wanted to bring up, because I have it in my notes, the rule of nine. And Silver actually brought this up to me, but essentially after 8 trading days of having green closes, so 8 consecutive green closes, the ninth day has an extremely, extremely, extremely high chance of closing red. It's a very consistent historical trend. It doesn't always happen, but it does have history to it. So it's called the rule of nine. Um, just be aware of that. Okay, things could look very bullish right now. It could look like we're going to be pushing up into this upper Bollinger, and then we can full on reject. Um, the rule of nine kicks in all the time, and especially if this is a major selling structure. Again, this is an inverse cup. This can still head downward. We are still below the the 200 ma, which means we are still in bear territory. So just make sure you have things hedged as we're climbing upward. And then you can obviously cut those hedges and re-hedge to better levels with longer durations once we actually do head upward. And that's kind of the goal. Uh, but yeah, trade safe, everybody. Tomorrow's gonna be an interesting day. Uh, yeah, I'm half asleep right now, so I'm gonna end the video there. Trade safe. Have a great day. Have a great weekend. And I will talk to you all Sunday evening. Take care.